Happy Tuesday to you, Todd.
Great to be here and great to be sponsored by AgroLiquid.
Absolutely. Thank you very much. All right. Grain trade as we sit here, ending the month of May, heading into June.
Wow.
You called us here a week ago. Last Tuesday you were with us and said, market looks to me like this might be a little too far too fast, and I see the space moving lower, and so we have.
And we moved lower, but again, overnight we were down significantly. We made a pretty dramatic reversal right here, especially in soybeans. It doesn't make a lot of sense. I have to be honest with everybody. The whole market system here is not really making a lot of sense. You've got a much stronger dollar, okay, which should not lead to much stronger grain prices, but it is. So you've got a stock market that's exploding. You've got oil, which is exploding. You've got grains, which now are popping higher. I think this is like, the final dance here, but we are seeing lower highs in soybeans. So to me, that indicates that 1040 level we tested, we're probably going to test it again. I'm looking for lower prices here, although I'm very bullish. But again, I think a lot of this has to do with the July squeeze. We get what happens is people end up a little bit too short going into an expiration and going into delivery. And of course, we see this move. If you look out in the future, Novi is nowhere compared to rallying as much as the Julys are. So I think we're going to see lower prices here. Again, I want to be a buyer. I'm looking for spots to jump in and buy. I think it's going to be a great year. I think we get through this July expiration, we get through the delivery here, I think we're going to have a good summer. However, I do believe that for a stronger market and for a more sustainable market, I think a little bit of selling would be much healthier for the market.
Very good. So yes, you are right. We are down, or higher rather, by over 7 cents in nearby July, just a couple of cents higher in the November soybean contract. So we have made a turn. Again, just to be clear, you think selling and a bit lower trend is going to be more stabilizing for producers, the entire industry here, and for longer term means better news.
Yeah, I think so, Mark. Again, one of the things, it's hard, obviously, if you're a producer out there, you don't ever want to see lower prices.
Well,
but
sure.
From a trading standpoint, from a technical standpoint, there's things that aren't logical right now. When things aren't logical, I have to look at it and say, why is it the problem here? So for me, I want to see lower prices just because I think it makes it stronger. I think it builds a better base for the overall farming and producing community. I think they end up with a better rally. If we see some selling here now, it'll create a better opportunity down the road.
All right, they could look at the corn trade before we leave. Those of you tuning in and wondering what the corn is doing, it's up 2.5 to 3.5. July up 3.5. December new crop is up 2 3/4. Check that soybean trade once again. As Todd mentioned, the front end much stronger than the back. July up over 7 3/4 now, but November up, but only 2 1/4. And then the wheat trade, is it following or not? The answer is yes. July up over a nickel in Chicago. Kansas City, the nearby July, up 3.5. Minneapolis right now at this moment is 4 cents higher. Todd Horwitz live in Chicago. Back in 1 minute. We'll check out that livestock trade. Limit down yesterday in cattle and feeder cattle. We'll get his thoughts in that space, as he calls it, in 1 minute.